We now move on to a next sort of Q&A and discussion. This is almost an insight into some of the discussion which happens inside a very large global company. This is Pearson. I'm delighted to welcome to the stage Michael Barber and Katelyn Donnelly. I'll give a very brief introduction, but they will say a little bit more about them. So Michael has been an advisor on the education policy to the UK government for a number of years and is now chairman for the Pearson Affordable Learning Fund. And Katelyn Donnelly is the manager and helped found that a few years ago now. So she's had a storied career, actually. So if you look in the Global Corporate Venture and Power List 100, she's down there. So there's a longer brief, so I recommend doing that. She'll say a few more words. I will now invite Katelyn to come and give a little bit of a perspective on the Pearson Fund. Thank you.
Thank you, Jim. So we'll just give you a brief overview of our fund, how we came to it at Pearson, and then launch into Q&A. When you go into the developing world, many countries outside of the US, the UK, and Central Europe, the state of education looks something like this. Students attending government school, often not in a classroom, textbooks that aren't written in their native language, that are clearly not age appropriate, and a teacher that shows up about 70% of the time. This trend, which millions of children around the world face every day, has led to a proliferation of private schools in the developing world. And so if you go to big urban centers like Lahore or Delhi or Nairobi, 70% of children are in fact in private school. And this represents a large mass market portion of the population. And so as Pearson, as the world's largest education company, traditionally a US, UK company, was becoming a global education company, we thought, first of all, how do we address markets that are outside the traditional developed world? And then how do we begin to develop products and services that can potentially access populations such as this, where we see a strong demand for high quality education, but at an affordable price? And so we created what we call the Pearson Affordable Learning Fund, a fund inside of Pearson that was going to invest in education startups in the developing world that were tackling this trend. And so our objectives with the fund were to provide millions of low-income children around the world a quality education in a profitable, scalable manner. And second, to demonstrate to governments and donor agencies that low-cost private education can help the poor in a cost-effective way. And so that private solutions can actually be a solution to government's key question, which is how do I ensure that every child has access to a high-quality education? So to do this, we started with an initial $15 million, and 2 years ago we were able to raise an additional $50 million from Pearson to start our fund to take significant minority equity investments in startups that were addressing this trend. Each company that we invest in, we have 4 main criteria for. One is to demonstrate successful models that generate market-based financial returns. So all of our investments are subject to the same financial scrutiny as all of Pearson's emerging market M&A. Second is to have a relentless focus on efficacy and learner outcomes. So as Pearson was moving from being a big print publishing company to being a full-service education company, one of the key roles of me and Michael was actually to develop a method of how they systematically measure impact on learning. And we used the fund and our portfolio companies to ensure that we had a method to relentlessly do this. Third is that they target lower income and emerging middle class consumer markets in the developing world, so our key target demographic. And that fourth, they have scalable, proven models and credible management teams, so that we're really investing in businesses that can scale and have a large impact. As I mentioned, one of the key tenets of our fund, which we think makes it unique, is that we're deeply focused on learner outcomes, and we embed this notion of efficacy at every stage of our deal flow, from initial diligence to post-investment tracking and monitoring learning outcomes, and then doing annual third-party review to ensure that, that the companies we've invested in are delivering outcomes. This methodology is one of the things that I think is particularly important or a key value add of corporate venture. Is the way we see our fund is as a global education expert. So we know that we don't know the individual markets. We're not experts in Ghana, we're not experts in South Africa or the Philippines, but we are experts in how you get children to learn and how you get the business models of education to function appropriately. And so that can really be a big opportunity for corporate venture funds, is to take your developed world expertise and then work with local actors to have that context. So a couple of portfolio companies examples, just to show you what are the type of investments, things that we invest in. One is the Spark Schools, which is a academy chain based in South Africa. When we made our investment, they had just launched their first school. And they're currently now, 2 years later, at 8 schools with over 3,000 students in Johannesburg. The plan is in the next 5 years to reach 64 schools and 60,000 students. This is the first blended learning academy on the continent, and that means that the students spend a quarter of their day on computers, Chromebooks, doing modules for math and English, and the rest of their day the teachers are able to use a more tailored pedagogy to do group activities. And this has resulted in 90% of the students in the youngest grades do 1.5 years of learning or plus in 1 year. And so this greatly outperforms the other local private schools as well as the government schools. And one thing to note on this is the Spark Schools operate at a very affordable price point, about $1,000 a year, and that's the same cost as what the government of South Africa spends on a per pupil basis to put a child through private school, through the public system. And the second example of one of our portfolio companies is called Avanti Learning Centers. It's located in Mumbai, and it's a test prep company that focuses on getting lower income students into the IIT engineering colleges in India. They're highly competitive with 15,000 applicants for what started as 450 seats, which is a fourth, and they charge about a quarter of the cost of the competition. And they've had tremendous success of getting their initial batches into the IITs, and they've actually gotten their first student into MIT, and he just finished his freshman year. So it's been a very successful company, and tutoring is a multi-billion-dollar business in India, and one that we're very proud of. So we believe we've invested in the leaders in this market, but we're just scratching the surface. And this is, I think, the big opportunity for corporate ventures, is just looking at how big and how fast growing emerging markets are, and that you can use venture funds in-house to really begin to experiment with tackling that market. We've estimated the number of learners in emerging markets that we target to be around 1 billion today, and growing at 8%, and that the market for affordable learning is also growing at 8% and will be a $320 billion market by 2020. So what have our results been after 4 years? We believe we've demonstrated successful market-based returns that our corporate finance team has verified independently. We've invested over $20 million in 9 companies in 5 countries. We're making progress to reaching our goal of 1 million learners, getting to 350. We've attracted mainstream investors to participate and co-invest with us in the space, and are continuing to build and deepen those partnerships. We've begun to influence governments to believe that the private sector can be a partner, not a competitor, in education. And then we've also issued several white papers and worked with Harvard Business School to do case studies on our fund. So we'd love to take questions and discuss further with you about our model.
Great, thank you, Katelyn. That was really powerful insight. I suppose we'll definitely take questions from the floor, but if I may, I'll take the liberty of asking the first one. I was interested from Sir Michael, from your perspective, when you were thinking of co-founding this, Pearson was a broader, diversified media group. They've sold off, obviously, FT, Merge Market, a number of other things. It's been a period of consolidation in one sense to focus on that. How much was the thinking 4 years ago that actually Pearson would be moving in this direction, and therefore the Affordable Learning Fund was the core strategic tool?
Well, thank you, Jim, and thanks everybody for inviting us. It's a real pleasure to be in this forum, and we'll talk more about the venture fund in a minute. But but going to Jim's question, it was fundamental to the reason I went to Pearson. So I started at Pearson in September 2011. They were moving towards becoming an education company. I was then at McKinsey previously, as you said. My career was in government. I went to Pearson because there was a real opportunity to develop the low-cost private school market, first of all, as a source of learning for the 70% of kids in Delhi, Lahore, etc., who are already in these low-cost private schools, generally performing better than government schools, but still not performing well enough. But also because it would be a source of innovation for government schools. Because, as Katelyn mentioned with Spark, but it's true of most of our portfolio, the cost per student in these private schools is the same or less than in a government school. And so, in theory at least, the governments could adopt these investments. So that was the second reason. And then thirdly, from Pearson's point of view, having the innovation from this fund fed back into the future strategy is really powerful. And we do that in addition to making what we think will be very good returns on capital compared to any other part of Pearson. So we're delivering on the capital, the returns on capital, but we're also delivering potential innovations, new markets, new ways of thinking about education for the future.
Right. Great. John Fallon, who's the CEO of Pearson, when nominating Katelyn for the Powerless Award, he said, in effect, when he tripled it to 50 million for the latest pitch, he said, he's doing so because it works and because it critically informs our long-term business strategy.
Yeah.
I suppose, Katelyn, from your perspective, tremendous results. You've got this backing from the CEO, obviously, Sir Michael's chairman, sort of supporting. The goals are pretty ambitious. The market's large, 320 billion market by 2020. Is this enough? If you had a blank canvas, could you say, actually, we think the market could stand us doing more, putting more money out, we could be a bigger team? Do you think, what are the proof points to getting towards that larger goal and larger ambition? How big could you be? Because a Bertelsmann, for example, has like 4 departments in Brazil, India, Asia, and US, Europe, and they put out I forget the figure, but it's about north of $1 billion, I think, so far. So,
yeah, well, I think one of the important parts for our fund is that we started small and we have not made a bad investment to date. And so we've been very diligent about just not deploying capital, but really making sure that we're investing with the right people and the right market opportunities, and those proof points and making sure that you get the right companies to start with, I think have been critical to demonstrating to Pearson that we are a fund that deserves more capital and should continue to be invested in. I think we've seen a proof point in our schools businesses, which are they tend to be longer term businesses to build, but one that Pearson's been really excited about. And the next frontier for us is beginning to get into even more technology-enabled models, particularly in higher education and in skills, because that's where we see even more market opportunity.
If I could just comment on that, Jim, and reinforce Katelyn's point, that when we started on this basically in 2012, by the time we got the fund up and running, this was a market that nobody was investing in. Everybody else we spoke to said, too risky, too small scale, you won't find any companies. And so we knew we were taking a risk. And so one of there are basically 3 things I do as chairman. One is help Katelyn pick the team. We run this fund with a team of 5 people that Katelyn leads. Yeah. So it's very lean, and we have to have really good people who can sort of take care of themselves across the world. The second thing is to keep focused on the vision of better learning for more students, affordable price right across the developing world. And then the third thing is to say to the team, as I do constantly, if you explore an investment and get close to making it and then we decide not to do it, that's not a failure. That is a really important piece of learning for us, because you could easily start pouring this money out and then just run into a series of failures. So we reward people who explore an investment thoroughly and then at the last minute come to me and say, actually, we don't want to do this after all, because we've learned a lot on the way, and those lessons can still be applied into the fund. And then the final thing I think I do is create space for Katelyn and the team within the corporate. Everybody out there knows that big corporations have lots of rules and regulations. I've worked in government. They're not unlike government departments in that way. And what I can do is create space, so keep the sort of bureaucracy of a big company away from the innovators and the entrepreneurs that Katelyn employs. The quote I use is from some of you will be familiar with the Spanish footballer Xavi, who says, "I'm not strong or skillful. Without space and my teammates, I'm nothing." So I try to create space and provide teammates for Katelyn and keep the company out of their way so they can get on and be entrepreneurial.
That's great. That's a great viewpoint. And then in terms of, if I'm thinking about the broader education or the education technology space, like John Thornhill in the FT yesterday wrote about sort of almost this second renaissance in learning that is happening. You know, the affordable learning is one bit, the emerging markets is one piece. How does it fit within a broader Pearson context, maybe that they might want to be looking at some of the developments happening in MOOCs or Coursera in the US and in Europe and some of the developments on that side? Is there a way that you're joined up into the Pearson sort of broader thinking in that
Totally,
space?
and indeed, in our team, in addition to the Affordable Learning Fund, we have a research and efficacy team that is prompted originally by Katelyn and myself, is putting in place a way of measuring the impact on learners of every single Pearson product. That's a fundamental part of the strategy. So we want to be judged on our outcomes, on our impact on learning outcomes, as well as on our financial returns as a whole company. And then secondly, we have a research team which is looking at the future of exactly these kinds of things. So we just published 2 months ago a paper on artificial intelligence and how that's going to impact on learning. We're running a session next week for large numbers of people on how to think about innovation right across the education space, and all of that is informed by what Katelyn and the team do in the Affordable Learning Fund. So that's one strand of my wider role, but it's the action strand. It's where the innovation and thinking meets the real world and transforms it, hopefully.
And one thing just to add on that is one of the key things in education is people assume that if you spend more money, you will get better results or you'll get better learning. And our fund is working to prove that you're going to break the cost-quality continuum, and instead you can provide high quality for lower cost. And that's important everywhere in the world where government budgets and education budgets are coming under scrutiny.
Interesting. That's
and we hope that in addition to it informing the transformation of Pearson, we hope, and indeed we're succeeding in attracting other investors into the space. And because we've kind of blazed a trail, very often those investors want to come in alongside us because we've learnt more faster than any other group in the business.
That's interesting. Does Pearson take that larger strategic stakes outside of the affordable learning stake? I have a vague memory that you have done historically, in terms of US or European-based companies, for example, that maybe have been like a Coursera type or doing ed tech. Is there any of that minority investments happening outside of your team?
So Pearson's an LP in a Silicon Valley-based education-only venture fund that makes some of those sorts of investments. And then sometimes the business managers, when it's strategic to Pearson, invest off the balance sheet.
Okay, thank you. Questions from the floor? I mean, this is a fascinating opportunity. We've got one at the front. I think we've also got one at the back. We'll start with one at the front, and then we'll go to the one at the back in a second. So
thank you. This has been really inspiring and very interesting how, as a sort of education and data company, you sort of look to sort of educate the world in some way. I was wondering, as a sort of for-profit PLC, how you get the Affordable Learning Fund to make sense. Like, these projects seem relatively small scale compared to Pearson as a whole, but it seems that you're sort of transforming the organization as a whole into this sort of education company. I was wondering how you joined up this sort of very sort of small scale impact work with the clear sort of strategic goals that you're talking about within Pearson.
Do you want to go first?
Yeah. Well, we work pretty hand in hand with business managers, and so we realize that while there's, at Pearson a $500 million P&L is pretty small, so our $20 million investments to date are still pretty small scale, that they can be deeply informing of those billion-dollar businesses, and that also we can be the first frontier for looking to their expansion into the developing world and building those relationships, understanding local contexts, et cetera. So there's a ton of learning that we embed in with those managers.
And part of my job, in addition to chairing the Affordable Learning Fund, is to be on the Pearson Executive, bringing a kind of perspective on global education, which I've been writing and thinking about and doing for 25, 30 years in various different roles. So, but the Affordable Learning Fund, as I was just saying to Jim, it really gets practical. You have, like, we're invested in Spark Schools. We have to understand what you have to do to get kids to learn in Johannesburg, and we have to transfer those lessons ideally to the government of that region of South Africa called Gauteng, but also into Pearson. So it's very practical and very hard-edged, and all the things that venture capitalists understand about getting the right people in place in the companies you're investing in, making sure they're working, making sure, as Katelyn was saying, they have a relentless focus on student outcomes as well as the revenue. All these things are important. And inside of Pearson, Katelyn and I have always taken the view that our credibility depends on getting a good return on that capital, as well as the student outcomes. We don't want to be seen as some kind of corporate social responsibility where it doesn't matter if you lose money. We want to be a very successful fund and generate learner outcomes at an affordable price.
That's great. Question in the back is, do you say your name? I think it's Nicole.
Can you hear me? Sorry.
Yes, that's better.
Thank you. So Michael, you were talking about being a first mover in this sector, and Katelyn, you were talking about how one of the lessons learned is it's actually perfectly possible to deliver good returns and maintain an affordable, low-cost education. So I was wondering if you could speak from a first mover perspective, some of the lessons learned from being a first mover in the sector. What can you share with the community as to how to go into the sector, how to maximize returns and ensure a high-quality education in the developing world? Thank you.
No, I think that's a really great question, and actually something that some of the people who did the thought leadership for this event asked me about. And my headline on that is, you start small and don't outsource your brain. So I think often people who sometimes develop these sort of initiatives think, well, the first thing I'm going to do is hire a consultant who's going to map out the market, and then we're going to they'll come up with a strategy, and then I'll maybe get someone to execute it. And instead what we did was we spent the first year really understanding the market, understanding who was doing things that were interesting. I probably visited 50 schools. We found sort of like the best team at the time in Ghana that we made the first investment in, and then we're able to learn slowly from that experience to find the next investments, the next entrepreneurs. And so I think you have to do the primary research and work yourself, and be willing to learn, like really rigorously learn and evaluate your success and what's working and what isn't working as you go along, and realize that this effort, if you're going to do it right, requires a dedicated team that's willing to like get out there, get their hands dirty, et cetera. I mean, one thing that maybe wasn't picked up is that we do take significant minority equity stakes, so usually between 20 and 45%, and that usually comes with 1 or 2 board seats. So we really do work with the companies on strategy, on management, on operational issues, on regulations with government. So that really contributes a lot to our learning for the next investments.
I could just add 2 points, and thanks for the question. One is, in the end, you have to be bold. You have to take some risks here, and the early investments, we were doing that. The second is a more refined, but in many ways more important point, which is, in our field, if you set this up in opposition to government, it would fail. So we never argue we're doing this because government is hopeless. We're doing it because we want to demonstrate in the low-cost private sector that you can innovate, get better student outcomes, and that those innovations could potentially be transferred into government systems. Because in school education, but also actually often in college and higher education, government funding remains overwhelmingly the majority of the money funding the system. And so what our relations with government are fundamentally based on, we're going to show you in the private sector some innovations that you could adopt, and we want to dialogue with you. And your job as a government is not just to run the government system, but to think about how every child in my country or my jurisdiction gets a really good education as fast as possible, and we want to help you in that. So the dialogue between ourselves and government is a very important part of making the fund work. And we've believed all the way along, if we'd set ourselves up as you're all no good and we're going to do it differently, we would have lost, because you'd run into government regulatory, you'd run into conflict in the media and so on. So we've always built dialogue with government in the countries where we're investing.
That's great. And the report that Katelyn mentioned, it's out there from Charmin. She's been around the Practitioner's Guide to Steps to Corporate Investment, Innovation and Collaboration. And the power list that she's in is in here as well. They're both outside, I think, copies. So got a question in the front. Pune, there's a microphone just there. Do you say your name for everyone's benefit?
My name's Pune. I'm with a local non-for-profit in California that I started myself. First of all, I'm just ignited and inspired by both of you. This fund is extraordinary, so I'm just super inspired and grateful to know about it. I actually helped start a school in Tripoli, Lebanon, for Syrian refugee children. Started with 350 children, now there's 2,000. Out of curiosity, I was wondering, when you go into these developing countries, what makes you choose those areas to start up these private schools? Do you charge tuition for these children to attend, because you said it's a private school? And is there a competition with the schools that are already in place, and how, and is that affecting them in a negative way? Or, I'm assuming you probably have like a line out the door with kids that want to attend this particular school, especially the Spark School in South Africa. It just looked like, from the picture, of course, looked like a nicer school, I'm sure, than the other ones nearby, and if there are any. Super inspired.
Yeah, thank you.
Thank you.
No, thank you. That's a really a big compliment. So we invest in entrepreneurs and entrepreneurial teams that already exist. So usually they already have at least one school. I mean, we do have a greenfield school chain in Manila, but usually they already have one, sometimes several schools. And the model is tuition-based, so they do pay tuition payments, but we ensure within the shareholders agreement that there are like limits on how on price increases, and we only invest in school chains that are targeting the emerging middle class or the lower income population. So the fee levels have to be affordable to that population, and we do a lot of research on that. And our belief is, to the point we made earlier, that high quality education doesn't need to cost a lot of money. And we very rigorously benchmark the student outcomes of our schools against the other private sector schools and the government schools to ensure that we're delivering a higher quality product for what we think is a lower cost. And so we do compete. We have to. And one of the things that we think is important for this market is that we are in competition to attract parents and demonstrate, and we're accountable to them every single day for high quality, for delivering a good product. And that's one of the things that we think can actually transform education in the developing world, is that choice and competition.
One of the, just to build on that, before either Katelyn or I was at Pearson, we were working both at McKinsey, and we were working on a strategy to improve education across Punjab in Pakistan, which we're still involved in. And that was an eye-opener on what education looked like on the ground. The opening picture of the boys sitting in the dirt reading torn textbooks, that was one of our school visits back then. And we've made real progress with that. And I think for us, the learning of working on a big government reform, 100 million people in Punjab, 55,000 schools, government schools, and about 35,000, 40,000 low-cost private schools, that's where we got the vision. And so when we think about the investments, we're thinking, how could this fit into a wider ecosystem? How can the children in these schools benefit? But also, how can we really get to scale? And there's two ways you can get to scale. One is you can attract further capital in, which we're making progress with. And the other is you can persuade government to adopt some of the innovations. And then you get to a scale of millions and millions. And so we're always thinking about how our schools fit into a wider ecosystem, because that's where the real transformation lies.
Perfect. In which case, we'll stop there, and please join me in thanking Sir Michael and Katelyn.